Hello, everybody. A very, very warm welcome back to another live stream here. Did I miss much? I think I might have missed just a little bit. Oh man, it has been a while, but it's amazing. Great feeling to be back streaming for you all. Thankfully, I'm able to come and stream today, which I'm very, very excited about. I mean, a lot's changed in the markets, right? So I hope everyone has managed to hold up well in these current conditions, which have been tough, to be honest. So yeah. I don't really know where to start, but it is good to be back. And hello to everyone who's decided to join me today on this Tuesday afternoon here. I'm streaming. I think the clocks changed. Daylight savings changed, didn't they, over the weekend? So this is probably an hour. This is an hour earlier than I would have normally streamed. But it's still the US Open, I believe. The US is just open now, and I always like to stream on that US Open so we can get the meat of the volatility for the rest of the day and on the stream itself. So let me just pause now and just say hello to some old friends who have decided to come back onto the stream today. And hello to you all. Samir Khan, it's very, very good to see you all. YTV, hello to you as well. Aksad, hello, welcome, and welcome to you. Thank you very much for the message. Sonia, hello to you as well. One Master D, SK Collection, hello to you. Bliss, hello to you as well. You seem excited. Yeah, well, it's been, how long's it been, guys? Anyone doing the countdown? It must be a month since I live streamed. I probably haven't gone a month off of live streaming since I was 22, 23, to be honest with you. So yeah, I'm excited for that. Martin, hello to you. FF47. Regan, hello to you as well. MyFX, no, good to see you, my friend. FF47. Samir, good to see you. Maria, hello to you as well. Thank you very much for tuning in. I hope you're doing well. SK Collection, I might have already said your name. 7377. Fizo, everyone on who's decided to join today. It's very good to see you all. Curtin, I see your kind message on there as well. The Businessman 2936, hello sir. It's best in price and looking forward to getting funded with you, sir. One of our people, members of the community over on Atmos, hello to you as well. Aristo Daily, good to see you as well. PNYX4, just reading what you said there. I said, do you think 5 days is good time and still counting for top named firm? Not sure what you mean by that. I do apologise. Timmy, hello to you. Welcome back and thank you very much for the message. Who else have we got? Dev Mikos, hello to you. I'm loving seeing the usernames. God, it feels like I've not been streaming for a year. JY Trades, hello to you as well. Why today's market spike without news? I mean, there are external factors right now that are driving the moves in the markets with the war in the Middle East. Pfizer, hello to you as well. Henry Okeem, hello to you. Sorry, I'm missing people's messages here. The chat's going crazy, which is good. Perfectly cute. Yeah, 1 month. Yes, indeed. We are doing the giveaway, guys. As I said before, if you check the description, then you'll be able to see the details of that giveaway. Mohammed, hello to you. Love you as a mentor. Thank you very much. Hope you're doing well. I'm a big fan. Thank you very much. Safdar9688. I'm doing well. Doing very, very well, and looking forward to getting stuck into some trades and some analysis for today's live stream. So, just to give you a background on the situation with my trading right now, my own personal trading is that, you know, I've done a lot of the back testing, as you guys know. I've said it many, many times before, and I know from my data that in times of fear, in times of uncertainty, in times of panic, my strategies, my mechanical edges tend to go into periods of drawdown during that time. So on my personal prop accounts, I've switched off my trading. Well, I did switch off my trading for quite a few weeks, and it actually proved to be the best thing to do because I've looked at obviously the results during that time. It's nothing catastrophic, you know, it's still way within the drawdown parameters that I'm happy with, but there is drawdown, and that just, you know, in my mind is just help me assure myself that I made the right decision, really, because you never really know sometimes. But yeah, that's what I've decided to do. But as of this week, I've decided to launch back up, my methods and my ways of trading and my own personal trading accounts as well. So let's hope for let's hope that things calm down and the markets have a bit more of a clean direction, let's say. So yeah, that's the situation at the moment with my own trading. We've obviously had a lot that's gone on over the last 6 weeks, which I don't need to go into because we already know the situation. I'm looking ahead more to the data we've got coming out. What's the current theme in the market? Why when I was streaming 6 weeks ago did we have dollar downside, stock market upside, gold upside, and then we fast forward 6 weeks and it's completely been reversed? Well, oil is the answer to that question. Oil shocks. With the situation escalating in the Middle East, that's having a direct impact on oil prices. Higher oil prices mean prospects for higher inflation. That means central banks need to change the way in which they conduct their policy. Previously, what we had was a situation where it was coming into 2026 and we were looking to cut rates. Yeah, we're pricing in 4 interest rate cuts. And now, when I had a look at the situation this morning, look at this. We do not have an interest rate cut priced in for the Federal Reserve for the remainder of this year. 29th of April, which is the next Federal Reserve decision in a month's time, 97% chance that rates will be held where they are. And that is between the 350 to 375 mark, 3.5%. When you go to June, 92% that we still are at that mark. As we go to July, 86% that we still are in that mark. I mean, it's the script is completely flipped. That's why you can never take time off. And I haven't had any time off. I've been working. But if I hadn't have been keeping up to date with what's going on, fundamentally, a lot of people would have been caught out. I imagine there was a lot of people who had blown accounts. So hopefully I can provide you with some clarity here. As we move into September, again, 86% chance that rates will be held where they are. October, 84% chance. And December, which is the final meeting of 2026, 73% chance that rates will be held exactly where they are. And what's amazing about that as well is you see this little 2% thing in this bottom right-hand corner. You can now see that the chance, there is a chance of hikes. Now, we won't see that unless the effect of oil prices going higher do have an impact on inflation going forward. But there is also that other thing that we need to think about as well, and that is that, let me just move my mic, and that is that we need to know what's going on with the strength of the economy, particularly in the US, which is why when you look at our economic calendar, as we look at the high impact news events of this week, when you go on to Friday, we've got a very, very important non-farm payrolls print. Why? Because previously non-farm payrolls came in at minus 92,000. Yeah, you see that down here. That is not good. That is a weakening in the labour market, okay? Now, in order for this inflation story to really develop, the jobs data needs to come in stronger. Because what is worrying for the markets, particularly risk assets like your stock markets, your cryptos, is that if we have a situation on one side where oil prices are going higher, the inflation prospects are higher, so people are worried about inflation, central banks are worried about inflation, but the data, if I see you on, can you see me on the screen? Yeah. Oil price is higher, but the data is falling, so i.e. the jobs data is falling, which means the strength in the economy is deteriorating. That's stagflation, okay? Stagflation is, as I've said before, one of the worst things that an economy can suffer, right? So that's why we're seeing at the moment dollar upside, stock market downside on the whole. And I think what would be wise is to wait for this print on Friday to see if that print of last month of minus 92 if that starts to become more of a theme, that we are starting to see weakening in the economy, in the main economic metrics like the jobs market. Because if oil prices keep going higher and the jobs market keeps going lower, that's going to continue to build that risk off tone. Okay, so let me just take some time here just to read some of the comments here. I will take a look at gold, guys. I know people want me to look at gold, and I will take a look at gold. All right. How serious is stagflation for the US economy? Stagflation is serious for any economy, particularly the US economy, because obviously it is the main catalyst for what goes on globally. Just reading some of the things here. The best analytics, thank you very much. Gold is hovering near 4,500. Is the geopolitical risk fully priced in? Or are we looking at a breakout to $5,000 next week? Now, gold, we can move on to gold, because I understand why people would say, look, gold is what's seen as a safe haven in times of uncertainty. We see investments flow into gold, right? So why, during this time of war, during this time of uncertainty, why isn't gold increasing? It's because of inflation, because of oil, right? Because when, as I just explained that whole situation, central banks or the Federal Reserve decided not to cut interest rates, which was not priced in 2 months ago. That complete flip of the script has meant a stronger US dollar. And as we've had that stronger US dollar, you can see the effect that's had on gold prices, which is obviously lower. So we've had a big move down really on the daily time frame on gold. And to be honest, I don't like the look of this like the look of this pattern that I see right now, because when I look at all-time high at 5,600, okay, and then we have a bit of a pullback, but create a lower high, and then we get that move, a next move lower, and now what it looks like to me is we're just seeing a very low volume. There's no real power or volume in this pullback, okay, yet. So it just looks to me like it's hovering, maybe even a bearish flag pattern forming here. It's hovering for a move lower, should the situation continue as I've just explained. Now, one of the difficult things for being an analyst is things are so unpredictable. Like, I can say one thing today because that's the current theme, and I can give my view on what I think is going to happen going forward. But no one truly knows, especially in these sorts of times, no one truly knows what's going to happen. And that's why this makes trading more difficult to predict. It's harder for analysts to forecast because things change by the hour right now. So when I look at the current situation on gold prices right now, I see a bearish order block here. This red zone, can you see that? I've just painted over green. That area, that for me would be a decent area of resistance. And I think that from there, we could see a move down to 4,400. And should we break this area? I mean, if we break 4,300, then for me, we're heading for that next low. And sometimes you don't have to overcomplicate it, right? I can see from the recent price action, I know everyone is married to their bias on gold, but that's such a dangerous thing as a trader. Look at this. Break of structure, mini pullback, break lower, mini pullback, break lower, mini pullback, break lower. Okay, here's our next pullback into our area of resistance. And can we see that move down to 4,000? What I like about this play, to be honest with you, is that 4,000 is yet to be tested. So as long as the situation remains roughly how it is, and that is that we see oil prices, okay, generally speaking, obviously because we have so much volatility injected, we do see sharp pullbacks like you can see in oil right now. If oil continues on the grind up and we see 150 on oil with the situation that's going on, which I'm seeing forecasted quite a lot, then overall, this I think will contribute to more gold downside, despite the fact that gold is seen as this ultimate safe haven during times of uncertainty. And that's the sort of situation um, that I'm planning out at the moment. Okay. What about GBP pairs dumped yesterday? Yeah, we'll take a look at some Forex as well. Giveaways, you can check the description of this video. Check it. How do you think the Fed can handle stagflation effectively? Um, I'd rather it be him than me. Listen, stagflation, you've literally got two things that are counteracting each other. You've got one side of the fence with higher inflation telling you to hike rates, yeah, and you've got the other side of the fence, which is falling growth, telling you to cut rates to stimulate the economy. Now, when you think about what the Federal Reserve's primary objective is, it's to control inflation. So I think that overall, unless there's a serious recession, hiking rates will still be, or keeping a higher rate interest rate policy will still be in the interest of the Federal Reserve all the time inflation's going higher, because that's their primary thing to do, right? So that's how they'll probably handle it, by having more weight towards inflation. Now, there is another thing that you have to bear in mind as well, and that is that don't underestimate the resilience of the US economy. Yeah. So that's why I'm saying that it's going to require quite a lot of downside in NFP, in manufacturing PMIs, all those economic growth metrics that we see. It's going to take a lot, really, to bring down the US economy into recession. I know people like to scaremonger it online, but it will take a lot. We've seen over the years how resilient the US economy is, but it's definitely a difficult situation. Good to see you, Ready Black. I'm doing well, thank you very much. OG Silent Traders, how are you feeling now, sir? Long time no see. Yes, I'm very, very good. I'm still here in Dubai, and I'm doing well. I think I've just answered some of those questions. Oh, I've just realised how far behind I am on it. Fantastic. So just explain there, Sonia, why I'm expecting downside. Okay. Um, Rack W Stars, thank you for your insights on stagflation. How should traders adjust their strategies during such conditions? It's a great question, because for me, it's more about like understanding your strategy and knowing if it does perform in times of uncertainty. Like some strategies would thrive, or would at least hold up well during these times. Like I've got a particular strategy which, out of all of them, I've got four, let's say. One of them's AI based, and three of them are mechanical edges. The two mechanical edges that I have, like the ones that have got the best results over the last 6 years, they perform the worst during times of uncertainty. And the third one, which is doesn't perform as well during normal conditions, holds up okay during bad conditions. So I would say it's a case of understanding your edge and going through times in history where there's been shocks, COVID shocks, or hiking shocks, or war shocks, Russia, Ukraine, or whatever it may be, and seeing how your strategy performed during that time. And that's the best gauge you can get right now, because other than that, with what's happening right now, you're just looking, you're going into the dark. But I understand why people might feel frustrated with their March trading. Let's just hope that April's better, eh? Yes, I'll take a look at the DXY, no problem. Okay, DXY. Okay, so Hmm. The DXY for me isn't really in an interesting area for me. Like this was this pullback here into this FVG, into this gap, and into this order block. That was perfect. Um, that was the trade. And I think now that we're caught in two minds, right? Because fundamentally we're looking probably leaning towards dollar bullishness, but at the same time, if I zoom out, right, you can see really the dollar has been stuck in a range. It's not even been trending. It's been stuck in that range between 100.5 and 96 ish, right? You can see it's been stuck. Sorry, let me put that back. It's been stuck in this range. What do you notice down the bottom of the range? Liquidity sweep, pretty much. Sweep of these lows from the bottom of the range. And then we come up to the top of the range and we get a really similar sort of looking pattern. So technically, there might be more pullback to come. We might pull back into the middle of the range. Okay, that would support your gold, anyone who's looking for gold upside. But that doesn't really marry up fundamentally. So that's why it's in a no trade situation. What I would like to see, if I'm going to continue to look for euro dollar shorts, pound dollar shorts, is I want to see that confirmation on the DXY, and that would look like a full candle closure, above these highs here. But even then, we could still be running into some resistance. Let's have a look at this pattern. Let's have a look at this area that is marked. Yeah, like there's some resistance in here as well. Like truly, truly, truly would be looking for dollar, like long-term bullishness. Should we see a break above 102? That's the key one, So I think from now until 102, if I scroll across, yeah, from here up, this area here, this area, that is going to be quite a tricky hold, I think, because I think we might run into multiple areas of resistance. So I wouldn't really be looking to trade it as such until we get that break above 102. So I'd probably look for something like this. And then you can see the space that we've got from one resistance to another, 102 all the way up to 104, not much resistance in the way, and that would be the one, So it is about patience right now. The best traders right now aren't jumping into trades, especially during this uncertainty. They're planning their situation for the medium term. And also, if you are in trades during these times, like I've said to myself, especially manual traders, I am an automated trader, so it's a little bit different for me, but manual trading, like you need to think really, really carefully about locking in profits when you can, protecting your stop loss when you can, and doing all those things to try and protect yourself. Do I trade silver? Not really, but it's a decent market to look at. Look at silver's up 4% today. But again, silver actually looks more bullish than gold because you've got quite a clean sweep here down and a test of 60. Oh, not quite actually, that's a lie. We've got a clean sweep here. We could see a move up to 86. I think silver upside, not that I'm looking for silver or gold upside to be honest, but out of the two, I think technically silver has a better technical picture than gold does. FF lovers, if the news for gold is bullish, then why did it sometimes go down first, then follow the news? What do you think on that? I've asked the same question to many, and all have different views. But what you got to remember, right? When news comes out, think of all of the positions that get opened, closed, or opened and closed. It's a lot. There's an injection of volatility at a quick pace, right? So you've got to think that it only takes just sort of like a lot of trades being opened or closed in one direction, and you just get that initial move in the opposite direction. Like when the news first comes out, it's 50-50 at any situation, unless it's like clearly in favor. So, and also people have that sort of theory behind the fact that we're getting stop hunted first before the move comes. And I've spoken to people and I don't believe there's much truth in that. I think there's good truth to the technical theory of liquidity sweeps, but I don't think it's a personal banks are out to look for losses. But it is true, there is pools of liquidity at certain areas. Price can be drawn into that area first before the move in the initial direction. So it's just very random when it first comes out. Someone's asked there about one of the Atmos challenges. I was actually going to just take a little break there and just let you know, obviously, since I've not been here, Atmos has introduced its Nova challenge, which is fantastic. I don't know if anyone's taken a look at that. If you head over to atmosfunded.com/Nova/challenge, basically, you only pay after you pass. So if you click on Start Nova here, you can read everything about it that you need. For as little as $5, you can get started. So, for example, it's like an activation fee. People in futures might understand this. But let's just say, for example, you wanted to do a 10,000 one-step account on Nova. Yeah. You can see the rules here. No profitable days, no consistency rule, no time limit. Here's your profit target, daily loss, max loss. And basically, you pay $5 to activate it, right? And then you pay after passing the $79, but only after passing. For 25k, still $5. For 50k, still $5. 100k, still $5. And 200k, still $5. So you can activate a 200k Nova challenge for just $5. And when you pass, if you pass, then you decide, or then you pay the fee, what it would cost for the challenge, only after you pass. It's really, really fantastic product there, and I've not seen it before, actually, to be honest with you. So if you want to know any more details on that, you can scan my QR code and you can learn more about the Nova challenge, or just head over to the website and feel free to take a look at that. But if you scan that QR code, you can see my links on there. And you can follow me on social medias as well. And if you have any questions, guys, feel free to reach out to the moderators in the Discord channel. Wow, lots of comments today, guys. I'm really sorry if I've managed to if I've managed to miss your questions. Hazara Trader, yes, so it's the same. After passing the 25k, if you pass it, you pay $5 to activate it. After you pass it, you pay $184. If genuinely, if I was allowed to do it, I would. But I'm not allowed Atmos accounts because obviously conflict of interest because I'm employed. So, yeah, I don't know if any others are doing it. I've not seen it before. It's fantastic. Safdar, hello. What is my favourite indicator? That's a difficult question. I'll tell you my favourite indicator for my mechanical edges, and that's the EMA, the exponential moving average. People, because it's not sexy, it's not smart money concepts, it's not order blocks, people just dismiss the tried and tested methods. I'm telling you, I've done the research. Don't sleep on EMAs, guys. Seriously. Yeah. And in terms of what I enjoy, in terms of like manual trading, then obviously SMC is great. I have to say, not that I know the person, but the Lux Algo SMC Concepts indicator on TradingView is very, very good. If you're struggling to understand smart money concepts. Stock market, yeah, it's good. Thank you very much, Faizo. Very, very, thank you very much. Stock market, interesting, right? So everything that we've spoken about, the stock market is suffering as a result. High inflation, lower growth prospects, war. It's not a recipe for stock market upside. And I was speaking to someone not too long ago, and I said, they said to me, well, are we in a bear market now? No, we're not, funny enough. Let me tell you why we're not in a bear market. A bear market needs between 20 and 30% of a drop, okay, from top to bottom. Anything 10, 15% is what's known as a pullback. It's a retracement inside a bullish market. So I'm not coming on here saying this is a great time to buy. Of course not. I'm just letting you know that as of right now, on the Nasdaq, we've fallen 13% from top to from the all-time high to where we are today, or to the lowest point this year. On the S&P 500, we've fallen 10%, and on the US 30, we've fallen 11%. Now, if you go back in history on the S&P 500, okay, and let's look at moments in time where we've seen a 10% or more, or around a 10% drop. What was it here? 21% rally. 10%. 10% here. Yeah. Rally. I'm on a weekly time frame. 7% rally. 10% rally. This 10% level, and then when we did get a situation where prices fell, past 20%, you can see that overall that was a much deeper pullback, yeah? And it can trigger more bearish markets. I mean, look at this one. That was obviously the flash crash of COVID. It's a bit more difficult, but that fell 35%. This 10% mark in the S&P 500 historically has been a good area for buy the dip traders to jump back in. And I'm looking at the current situation right now, not so much on the S&P 500 because there isn't a good area of support, but on the Nasdaq, we've fallen 13%. Daily. We've fallen 13% straight into a daily area of support on the S&P 500. Look at that. This blue box is an area of support. It's a bullish order block on the daily time frame. Look at the reaction. So, I would be lying if I didn't say, and we've even had the liquidity sweep on the lows. Liquidity, yeah. As of right now, what I'm looking for is a break above this high, pull back, and then go higher. And I have an attitude, and it's my own personal attitude towards the stock market. Is that I just I'm trying to think of the right way to say it. It's like I try not to be a hero and say, "Oh, this is it. The world's going to pot. We're going to see a 70%, obviously not 50%, recession. Data's rubbish. We've got war, and it's very easy to read headlines and say, we're doomed, because a lot of the headlines and a lot of the data, a lot of the news articles are doom and gloom. And I fell into that trap so many times 3 or 4 years ago. And I found that, look, if you end up buying into a bear market, then you can control your losses, right? You can control your losses pretty well. I'd much rather, over the time frame of my trading career, be someone who buys those dips of 10, 15, 20% than be someone who tries to be a hero and guesses, when we're going to see 30, 40, 50%. It doesn't happen often. And even when that does happen, it comes back. Yeah. So I've now shifted into a mindset of, for me, it's always a case of like, when is the best time and where is the best area to look to buy the dips? That's the way that I would look to do it. I'm not telling you how to do it. I'm just telling you how I would like to do it. And when I see 10, 15% drops in the stock market, my eyes widen a little bit because I'm thinking, this could be all right, So yeah, I like the areas. I like the reactions that we've seen from daily support areas on the stock market this week. Of course, should one of three things happen: another escalation in the war, a seriously weak NFP, or higher inflation. If we see that go further than where it is now, then of course I would probably say, okay, we're probably going to go another leg lower. But I'll be always willing to take that chance because of what history's told me. Zarab, hello. Coach, your analysis is top notch. Thank you very much. Appreciate that. Very, very nice. Now, guys, just a little small update regarding mentorship, regarding everything trading. You might have seen that I was on the website not too long ago on our Acuity economic calendar, which you can access via Forex as well. I know I said it before. People think that it's never going to come. Listen, the course is edited, right? It's well, sorry, that's a lie. It's 2 lessons away from being edited, which is what, probably 2 weeks. Then I can start putting the course on the website. We are making changes to the website to reflect the product. The product is all but there. In the times where I've not been able to come into my studio, like I've been working very, very hard on the whole automation side of things, and making sure I'm servicing and setting up the Telegram channels, etc. And I can say we are very, very close. In fact, I'm now at that stage where it's not me anymore. I'll be ready to launch from the product side in 2 weeks, but of course there's a lot of things that go behind launching such a big project like this, and we want to make it as good as possible. So my update for you there is, the course has had great progress. It's pretty much done. The whole product is pretty much ready to go. We're just waiting for the changes on the website and some things on the back end, and I'll be able to finally release the mentorship, which I know some of you are keen on, and yes, I'm looking forward to bringing that to you guys very, very shortly. Okay. In terms of, because I'm on the economic calendar anyway, I didn't want to miss news events. We have also got Good Friday. It's the Easter weekend, so I don't even know what the situation is on the markets there, because NFP is still coming out. Obviously, you imagine markets are still open. Volumes are going to be very thin. So be very extra careful on Friday, guys, okay? So on Wednesday, we've got retail sales in the US and also ISM manufacturing PMI. My camera's in the way. 52.3 is the forecast. What was the previous? 52.4? So not really much change there predicted on the ISM manufacturing PMI. If that figure starts to drop below 50, then I would start to worry, because above 50 is expansion in the sector, below 50 is contraction in the sector. Thursday is not really much going on, and as I've said, Friday is all about that non-farm payrolls day. Okay, so I'm still working, guys. So if you do need me, I will be active throughout the rest of this week, of course. But I wouldn't trade it. Yeah, Easter weekend, Thursday, Friday markets closed. Yeah, I wouldn't be trading it. I don't know if... Are they actually closed? I haven't actually had a look, to be honest. Safdar, if you go back on the stream, I explained exactly why gold, not cannot go up, it can, but why gold hasn't been going up during the war. Jeanette, hello to you. Good to see you, Jeanette. That's good about a mentorship. Love that. Sorry, guys. All good. Ruthless RR, hello to you. How do I control emotions like fear and greed? Tricky one. Because if you want to know how I do it, it's from pain, right? It's through years of trial and error. It's through years of making mistakes. When I first started, when I was very, very young, making lots of the typical retail mistakes that people make. And although it's like a cliche, it's a case of like you do learn from those mistakes, because the pain makes you learn from them. So I don't want anyone to make the same mistakes. That's why I do my job, so people don't go down the same road necessarily as what I did. But I understand that people still do and probably won't listen to me. So in terms of like things you can do to control fear and greed, if you have a set take profit, test a certain RR, risk reward. That might be 3 to 1, 2 to 1, 4 to 1, 6 to 1, whatever it might be. Have an in-play risk management plan, which basically means when you place the trade, you know exactly what you're going to do at every single point from when that trade is open to the point it closes. There's situations that can happen. It either goes to your stop loss, fine. Fear and greed. If you've got a set take profit and you know you're targeting 4 to 1 on every single trade, because that's what you've tested, yeah, then you shouldn't have fear and greed to hold it any further, because once the trade's placed, it's like a set and forget thing. You might have certain, certain parameters in there where you say to yourself, I want to move my stop loss to entry at 2 to 1. I just hit my elbow on the desk. And so that's fine as well. But if you've got set rules that you have written down in front of you, I imagine my phone is a piece of paper on the thing. They're my rules when I'm in a trade. I don't ever deviate from those rules. If you do still deviate from them, then you've got a problem with yourself, but you can train yourself out of it. But trust me, if you don't follow those rules, and they're the rules that give you the best results, then you're going to continue to harm yourself, and then you will learn. So you either learn the hard way or the short way. I won't be streaming on Friday NFP, no. Aristotle Daily, you started with manual trading, then by shifting it to automated. What's the thought behind that? The thought was that I got a different job. I've always been a market analyst, employed by various firms to be a market analyst, to provide commentary, to provide content. But the job that I was given here was one of much greater responsibility. With that greater responsibility meant less time on the charts, believe it or not, because I spent a lot of my time, and I'm very grateful for it, going to events or managing a team of global analysts here at Forex. And the bottom line was that my performance dipped purely because I didn't have enough time on the chart. So I looked into automation, and from there, a year later, I'm now fully automated, which, let's be honest, guys, is the way of the world. So yeah. Ready Black. Yeah, I will look at doing more live streams. Do you know when the mentorship comes out, there will be definitely more live streams, okay? Gospel, how many years have I been trading? Probably 10. 9 years, probably. When I was 19, I started. Um, started following signals from some guru online who didn't know what he was talking about. As imagine a lot of you went down that road. Pain is the best lesson, yes. Which calendar app is this? This is on our. You can access this on Everything Trading, but you can also access it on Forex. If you reach out to me, I can get you a free trial on these tools. We've got loads of tools on here. We've got economic calendar. Um, we've got asset overview, research terminal, economic insights, technical views, AI news sentiment, signal center. But yeah, there's a lot of them. So yeah, reach out and I can get you some free trials on that. You can access me on Discord or message me on Discord or anything like that. Khalil, I love your teaching. Thank you very much. Thank you, Dev Mikos. Samir Trades, hello. Connor's chart is so clean. Messy one. Yeah, OCD over here. Which time frame do I use? On the manual side with the smart money concepts, hourly time frame, or the 4-hour time frame. On my automated systems, one of them is irrelevant on what time frame it is, because it's measuring a range at a certain time, and the rest of them are 5 minutes, 5 minute time frame, intraday. Get ready with me. I'm not doing a get ready with me. No. Hello to you, Curtin. Is there a date for release date for the mentorship? Unfortunately, not. I am going to speak to the team this week to see if we can put a date in, maybe build some hype around it. So yes, thank you very much. Okay then, guys. Listen, I'll just answer a few more questions that are popping up, which is great. Thanks for answering the question. No worries. I know I'm behind on the chat. I do apologise. There's obviously a delay as well. There's like a 40-second delay, so I do apologise. And there's a lot of questions coming in. I can't physically answer all of them. How much success do I see consistent success from automated trading? It's not consistent success. It's consistent. It's consistent in its drawdown periods, and it's consistent in its profitable periods. I'll do another lesson one day about one of the main things that I learned was when you think about your win rate, if you've got one of the strategies that I've got has got a 6-to-1 risk reward with a win rate of 25% over a period of 4 years. Do you know, people think, 25%, that sounds like you're losing 75% of the time. So if you equate that over the months in the year, for the majority of the months in the year, there'll be drawdown months. So over the month, across January to December, I know you understand what a year is, but across that year, 75% of the time, on average, as an average, you'll be losing money. Yet the strategy returned something like 850% over 4 years. And that's the thing that people don't understand about trading, I think. Because they haven't looked into it, they think I know people say it all the time, but they think you have to win every single trade you place. You don't. I'll blow prop accounts, challenges. I'll go through challenges throughout the year, I'll maybe blow 3 or 4 live accounts and maybe 6 challenges, let's say, on that strategy, which is one of my high risk ones. But all it takes, and even if I was when I'm trading on a brokerage, same thing. That if you can be in the game for that time when your strategy is performing, right? If you can be in the game at that time, then you're going to benefit, because that period of where it's making money will override the 75% of the time that it doesn't make money. And sometimes I think that's where people don't think properly. But I know it's hard to understand. It took me a while to understand that. Exactly, Daniel. Yeah. Hello to you, my man. If I've got a 3-to-1 with 5 or 6, 7-to-1, and I only need 30% win rate to be profitable, and people go, "Oh, that's great. I only need 30%." But have you sat through a year where you lose 70% of the time? Can you handle it up here? Because if you can't, you won't follow the rules. You'll deviate, you'll miss the time where it makes money, or you will get really greedy and euphoric in the time it makes money, and in the time where it's losing money, when you have 12 trades in a row that lose, and you're like, "Oh, this is rubbish. No, I need to go to something else." It was never the problem. The strategy was never the problem. If you understand your data, you understand the drawdown parameters and what's normal and what's not, then you'll know. But it is a hard thing to grasp, that, even from my side. I think during the time over the last, I'm going to be honest with you, over the last couple of months, one of the strategies, 15 trades in a row it lost. 15. But it's only minus 1% because it won the first 2, it won 2 trades at 6-to-1 before that. So it's, you have to be, I am giving out a lot of value for free here. And a lot of people, Kelly, don't have that sort of psychology, to be honest with you. But anyway, listen, guys, I think we'll leave it there for today. I'll be live again next week, okay? And I'm hoping that I can move back up to 2 streams per week. The problem is with the situation, um, it's it's hard to plan too far ahead, But fingers crossed, at least be able to come back live once next week, hopefully twice. But as I said, when like the mentorship comes out, then I will be streaming more. And also, other than live streams, I am going to be launching webinars via Torex. So you can register and come and join me on Zoom for like an enclosed session, free registration. The details of that, again, this is why you need to be following my social media, all the Torex social media, because it's all going to be posted on there. Or if you're already a client of Torex, you'll get the email. Um, I'll be doing private webinars twice a month. So yeah, that's going to be starting in April. My first webinar will be on the 3rd week of April. So we're just going to start to do all of the landing pages and registration pages, and so you should be communicated soon. But if you have any questions about that, feel free to reach out to me. Also, make sure you're active in the Discord channel for the big giveaway. I know I didn't mention it much today, but it's in the description. Those of you that know, make sure you're in the Discord channel, because in the next 10 minutes, I'm going to be announcing the winners of our giveaway for today's stream. So then, guys, that just leaves me to say thank you very much for tuning in today. I do hope everyone has a fantastic trading week. Reach out to me if you need me. It was great to be back, and hopefully I will see you very, very soon. I'm sure I will. Thank you very much.